Hello traders, this is Igor from FX Igor YouTube channel, and today we'll talk about power of the round numbers. Right now on the screen you have a British pound dollar chart, and what I did, I just put a trend lines, horizontal trend lines on round numbers. So for British pound dollar, the round number can be 1.25, 1.26, 1.27, 1.28, etc, etc. In 80% of the time you will see some kind of reaction of the round number, and that reaction is visible on the chart. However, sometimes you will see that there will be no reaction. So what you need to understand is that you need to check everything before any your decision. For example, as you can see on the chart, on 11 December and the 13 December, here and here, we have a strong reaction on the 1.25. So we can say that 1.25 is a strong support for British pound dollar. The similar thing we can say for 1.26. We have two supports and 1, 2, 3 resistance. So the 1.26 is important price level, and you can add into your account and into your trading plan. Of course, for 1.27, we can say that sometimes it's important price level, but sometimes the price is around this level and you need to be cautious. For example, you can see that in November we have a lot of price up and down around this level. December 1st too, and 2 times during the December we didn't have any strong reaction on this level. However, we see that price oscillates very often here around this price level. So we need to put it in our trading plan as some kind of the soft level. Not strong support, not strong resistance, more soft level. And of course, as you can see, 1.28, it's a strong resistance. We didn't yet push it above, and we have 2 attempts in December 14 and 12 and 14, and this is the some kind of the trading plan. And I just want to show you one practical thing related to important price levels as round numbers. The problem and the interesting part was this day. It was the Wednesday, the December 13, and it was an important decision related about interest rate, one of the biggest impact in the forex industry. And what was my opinion in that moment? In that moment, I realized that all reports related to US dollar in December was really good, hawkish. What I can say related about that, as we can see that inflation is low, we can see increase of employment, we can see a lot of good things. And my opinion was that in that moment, on the December 13, we can see that the Fed probably, in my opinion, will not increase interest rate. My probability was, I think, 95%, I was sure, because there are no any kind of signs that they should increase interest rate. And the good thing is, when they see couple months that inflation is lower and lower and lower, they will think about steps in the next year, maybe in the spring next year, that they can reduce interest rate, which will kill US dollar in forex market, and US dollar will fail down. So this was my expectation, and I think that what was the interesting part of that is that I would just put you the moment before the decision. So this is 1 minute chart, and you can see at that moment the price was 7 pips above 1.25. So it was the round number. And what I realized, that the price lowest low that day was 1.25. And I was very, I got attention to risk in that moment. And what I did is, when price was very near to 1.25, I put a crazy strong buy trade, and I risk, believe or not, it was a 10 lots trade, and that I put a stop loss to 1.2499. So I put a 5 pips stop loss, and I put open target, and my expectation was that it would be dovish US dollar report and the price will go up. And what I realized, as you can see, after 10 minutes, price went 5 pips up, like you see. And 10 minutes before the news, I realized that price went more than 10 pips up. So what I did, I didn't move the stop loss, because during the news, sometimes you can see the drop of 10 pips and then go upside, something like that. I didn't touch anything. I just put 1.2499 stop loss. I have a 5 pips risk and open target. I was very, very aggressive. I put a very, very strong trade, and trade is realized, so that the trade was active. So I don't have problem, because a lot of people decide to enter after the news, and they cannot pick the right price in that moment. And even you put a pending trade, a lot of times my pending trade does not execute on the price that I wanted. So I had a live trade. I was waiting, and look this what's happened. I will just put to see what's happened very slow. It's 54, 55 minutes, 5 minutes before the news. Price little bit went, and then in just a second, we had almost 70 pips upside. And it was the sign of the dovish report. I read report in 1 minute. I see a little bit pullback, but it didn't do nothing. I just move my stop loss on 1.251 just for protection, to have at least 10 pips. But the price went up and up, and I earned around $14,000. That was one of the biggest trades that I created in just few minutes. It was the one of the biggest. It's a risky trade, and it was the one of the biggest risk reward that I had ever in my life. And it is not the end. The next day, I had a trade. I think I trade around 1.27. I think I just need to check. I think this is yes, I marked before this video. Yes, what I did, a round number 1.27, I made a buy trade and closed on 1.274. And the good thing is the trade was less than 2 hours, and I made, I think, almost $7,000. It was an aggressive trade too. Why was aggressive trade? When you see that the fundamental news, that the all kind of 1 minute chart, 5 minute chart, 1 hour chart, daily chart, 4 hour chart, everything is bullish. You have a strong movement upside, and you're around the level. Sometimes you can risk 10 pips, for example, and try to achieve 40-50 pips, and I did it. And like I said, I created a excellent trade, a good risk-reward ratio, a good profit, and it is a rare trade. It's a rare situation to win such a good trade, but round numbers sometimes can be very, very good. So I'm back on the first chart. Like I said, right now we are approaching in British pound dollar to 1.27, and for myself this level is very important. Why? For me, it's a bullish bearish invalidation level. So above 27 I will be bullish, below I'm bearish. But I do not react right now. I just wait to see what will be with the price. I want to see some price move to enter into trade. But the more important thing is that sometimes the strong level can be the round numbers, but you need to see the reaction. You need to see the proof that the round number is important price level. Because I can show you a lot of currency pairs right now. I can show you stocks, a lot of things on the chart, and you will see a lot of times nothing. Round level, you will see nothing happen there. So you need to have a proof. Before your decision, before your trade, you need to see on the chart reaction. That level should be support, should be resistance. The good thing is if that level was at least couple times a good resistance, a good support, and that will justify your decision to use that price level to enter into trade or to put a stop loss or to put target, etc., etc. So round numbers are very powerful, and I hope that you will use in trading. I wish you a great day, and bye bye.